Welcome to Dad's DeFi Space. If you're new here, my name is Kevin, and I am a father, a teacher, and a DeFi investor, and a trader who shares exactly what I'm doing with my own portfolio, all the wins, all the risk, all my mistakes, and all the lessons I've learned along the way. And if you appreciate real and truthful content, including all these lessons I've learned along my journey, please hit like, subscribe, and ping that notification bell and share this content with anyone who would appreciate it. We're going to break down the macro structure, short-term setups, and signals we're watching. Remember, none of this is financial advice. I'm not a financial advisor. Please do your own research and never, ever invest more than you can afford to lose. Crypto and DeFi are so risky, you can lose all your money. So, on how to trade perpetuals effectively. So we're going to be talking about how to effectively trade perpetuals safely on non-KYC exchanges. See, perpetuals, they give you leverage and they give you flexibility, but they can also magnify your mistakes to the point that you could wipe out your entire portfolio. So we're going to talk about a few things that you truly need to understand if you want to trade leverage. And if you want to help support the channel, you can check out our link for LayerBank. Right now, they're running a reward special, 20% deposit bonus. And if you use our link, that's 15% off all of your trading spot and future perpetual fees. And over a long period of time, that can actually account for a lot of your profit. So use those links if you'd like to benefit and support the channel. Of course, they're affiliate links, but I appreciate your support. Now back to what we were talking about. So there are a few things that you really should pay attention to if you want to trade perpetuals. And it goes into a few categories. Number one, funding rates. How much leverage you use would be the second. Having a diversified access into different exchanges. And of course, never ever invest more than you can afford to lose. So of course, understand the funding rates of your exchange. A positive funding rate means the longs are paying the short. That is a bullish bias throughout the market. Of course, you like to contrarian trade. And then negative funding rates, the shorts are actually paying the longs, which is a bearish bias in the market. So that's something you should always check before setting a trade, along with the charts, along with different indicators and signals on CoinGlass, or you can just follow us at Dad's DeFi Space. Just kidding, but I'm not. So now let's take a look at managing leverage like a pro, and it's really quite simple. It's hard, it's addicting, but you should always, not financial advice, of course, use leverage between 3x and 10x. The crypto markets are extremely volatile. I run smaller, high leverage positions, and yes, they have been wiped out before. They've also made some pretty gains, but that is not a game that I would play with a large percentage of my portfolio. Finally, I want to talk about withdrawal and diversifying. You never want to keep all of your trading monies or any cryptos for that matter on a singular exchange. Exchanges can be dirty in a way. I don't like to keep my hard-earned profits within the exchange. I like to withdraw into my cold storage wallets, a very important principle that most traders really need to pay attention to. Also, you need to have the knowledge to trade both centralized exchanges like LayerBank, Blofin, or maybe some of the big boys like Bybit, and then also completely decentralized perp exchanges like GMX, Hyperliquid, Avoidance, and Astar, which we've talked about all of those on this channel. And remember, we talked about this with our video we posted earlier today, but you don't win by trading more when trading with leverage. You tend to lose more when you trade more. So trading less usually is more. Now, I wanted to take a look at a swing trading strategy that I like to use. Of course, these are my trading techniques, but I wanted to go over the indicators that I like to look at, and then how I time and plan my entries and my exits. First and foremost, my time frame is usually weekly, But when I'm charting, I tend to use the daily and the 4-hour when trading. Of course, I always start at the chart with the longest time frame. So I would look at the weekly chart first, move into the daily, move into the 4-hour, and then maybe even shorter. If I do that, what I'm looking for are the differences between the shorter time frame and the longer time frame, right? So my entry triggers are usually on the 4-hour time frame, sometimes the 1 hour, and that is precision timing. I'm usually looking at moving averages and sometimes the stochastic RSI. So first, I like to use the bull market support band on TradingView, because if the price is within or above that band, we're bullish, and that's the trend, and the trend is your friend. And if the price is below, then I'm going to take bearish bias or caution, right? And I'm using that weekly bull market support band, looking at the daily chart for those dynamic zones that they're trading, or excuse me, the asset is trading in between, right? I also like to use the RSI and stochastic RXI, obviously. If RSI is down in above the 60 region, up in 70s to 80s, that is way oversold, and I am probably not buying at that moment. I may even be taking some profits. Now, if the SI is struggling to get above 60 to 70, that can indicate a bearish trend is on the way. So the ideal RSI setup, you're going to pull way back either into the 40 zone or lower. Sometimes it can get as low as 30 and even lower than that. And doing that, and when we're lower on that RSI, that's telling me, hey, it might be a good time to buy. By the way, we're trying to simplify these indicators just so they'll make sense to everybody out there. But another one that I'll look at, and I'll have to bring up a Bitcoin chart to show you this. So let me remove the volume, and then on top of moving the volume, I'm going to add in the stochastic RSI. And if you watch this channel, you know that I love to look at the stochastic RSI, which is another, momentum-based indicator. Let's clear all these off because it's reading like I have multiple indicators. So we're going to put the stochastic RSI on the Tau chart, and we're going to just check this out really quick. All right, so I can explain this. All right, you're looking at the weekly stochastic RSI and on the daily time frame, right? And you can see that we had a blue over orange cross right here. Now, we didn't dip all the way below. We went up into the line, back down, and shot up. Whenever you have a blue cross, it usually indicates a bullish bias. As you can see right here, it is where the trend changed, right? And usually, if you get a blue cross down, let me find one, right? What did we have? A diagonal downtrend. So I'm going to mark these on the chart so it'll kind of pop out just a little bit more for you, right? So we can see one here, right? Stochastic RSI cross down, downtrend, right? Right here, what do you see? Stochastic R down. What do we have? An absolutely massive downtrend, right? It's crazy if you look at it this way. So what I really need to get you to understand is this indicator won't always show everything correct. It won't. Sometimes it gives a false signal. But I have found that this one is usually correct at least 70% of the time, sometimes even 80, 90% of the time. So it's an indicator I definitely look at, and it's one that you should consider adding to your tool belt. Now, let's go back, finish up our conversation. Now, let's talk about my entry conditions, right? If the price is above the bull market support band, right, and it's pulled back towards the previous resistance, that resistance is now acting as support, meaning it's tapped into it and not broken below it. The more it's happened, to an extent, the better. Of course, if we're trying to break through resistance, the more taps could actually mean we're about to go back down. So be aware of that. So I want to see the RSI not oversold, so lower than 50. And the stochastic RSI, I would like to see a cross up. And then that confirms a bullish entry, and I'm going to take that trade. Now, if you reverse those metrics, price below the bull market support band, a pullback into resistance on the daily, and RSI between 50 to 70, I'm probably looking for a short. trade. And at the same time, you're also going to have your stochastic RSI crossing down, and it might even be a higher number, like above 80. Now, for exit strategies, I tend to look for swing highs, swing lows, and those become my kind of invalidation zones. And that's where I'll set my stop loss. If I decide to take a lot of leverage on the trade, then I'm going to set my stop loss much more aggressively and really close. Now, I use support and resistance zones to take my profits. I usually try to divide it into 4 zones, depending. I do allow that to be slightly flexible based on daily market conditions. And then, of course, you need to manage your trading portfolios. For example, you need to use lower leverage on these trades, 2 to 5x, in my opinion. I would rather utilize a little more capital, a little less leverage. If I do use high leverage, which I am running some high leverage trades right now, then you really need to aggressively be taking profits. And we've already taken profits on our last long trades. So I'm going to leave you with this daily checklist. If the price is above the bull market support band on the weekly, the trend is bullish. If you pull back below it, it's now become bearish, especially if we break the bull market support band. If RSI is between 40 to 50 or even 30 to 50, it's a great time to enter into longs, right? Because we're at the lower end of the RSI. If you're using the stochastic RSI, we want to see a blue stochastic cross up, especially less than 20. That's even better. If you also, during this time, you should pay attention to volume. If volume is going down, price is going up, that's usually not a good sign, and vice versa. If volume is going up and price is going down, that's not a good sign either. And then before you take a trade, you should always define your entries, your stop loss, your take profit point. I usually have multiple take profit points, of course. And if it really spikes up, I will move my stop loss up with the trade so it becomes a trade that you cannot lose. Smart. Now, if you have any questions about trading perps or trading spot for that matter, feel free to send me a message on Telegram at DadDeFi1013 or join our free Telegram group at Dad's DeFi Space. And of course, support the channel by checking out our link for LayerBank, a 20% deposit bonus and 15% off all trading fees, including perps. Also, we have good deals with Blofin and WEEX. And of course, we like to store our profits within Tangent wallets, unless we're providing some stables on Pendle Finance to earn and trade some yield. But that's a video for another day. Well, like I said, I hope this gave you a lot of good information. You kind of got a little mini perp trading masterclass with Dad's DeFi Space. So you're welcome. And of course, let's take a look at a couple of my trades before we move on to the next part of the stream. So right now, we're looking actually at the Avant chart, which is turned quite bullish today, as you can see. Quite bullish today. So we'll need to take a look at those positions. This is my Ethereum long on LayerBank. We are up 125%, as you can see here, which is awesome. This is our referral code, but you can find that in the description if you'd like that 20% deposit bonus. I think it's awesome. I'm up about $76 on this Ethereum trade. I've already taken 25% out at this point, and just kind of watching it and see where we go today. I may take another 25% if we start losing, but right now I'm just going to let it ride. And of course, this is Blofin, and we're going to take a look at our assets on here. I'm going into my futures account. You can see that we have a position here. It's looking pretty good. I like it. I like it. It is up 75%. It's an Ethereum trade. 3,876 was my average price. I'm only using around $100 of collateral, and I'm up around $61 right now. And then we also have, our bot, which, let me see if I can access this on the desktop. That's right where we were. It's crazy. It's not showing it here. Let's go back to our futures chart. I just saw them. So let's actually go down and check out our trading bot. We're taking a look at my trading bot. It's a future grids bot. This trading bot has been awesome. Basically, a bot just ladders you in and ladders you out of your position, much like an LP, but it can be much more strategic. I've been running a bullish trading grid bot on 15x leverage on Ethereum between 33.96 and 43.91, and it only just under $200, and I'm already at 50% profits over what I think I've been running this for about 4.5 days. So these bots are going to be great when dad gets busy, and cool to check out on Blofin. So if this helps you, please drop a comment, subscribe, hit that bell so you don't miss my next moves. Join our free Telegram group or check us out at dadsdefispace.org. Help support the channel by checking out our links, Non-KYC exchange, Blofin, and WEEX. That is what I trade on. And stay tuned. I'm going to be releasing a video on Astar in the near future. Hope each of you enjoy the rest of your day. And I want to thank you for taking some time out to help support my channel and my mission. Go find us over at Dad's DeFi Space on X at CryptoZone 1013. And until next time, ladies and gentlemen, stay strong out there. Touch some grass. Peace.